Morning, Dinesh and Peter. Morning, folks. Good to be here physically. So maybe I'll start the discussion, Dinesh, with, we are talking about strategizing for future. And maybe it is but unnatural for us to have any discussion without having a reference to the pandemic. And while it may look business as usual, I guess we all have been smarting back from what was the same discussion 2 years back would have been completely digital, and now it's good to see so many people as a full packed house. But I guess some changes in customer behavior, I would believe have happened, and I'm sure some of them are for let's say, for a long term. So maybe I'll ask you, Dinesh, if you could help us, with your thoughts on what has the pandemic made as an impact, should I say, from a customer behavior standpoint. So it sets a tone on what we are looking to build for the future, and maybe you can also give us some insights on how that you would look at that from a wealth segment vis-a-vis, let's say, a mass retail segments, considering that you actually are having a perspective on both.
Okay, thank you, Ram. Can you hear me at the back? Okay. So first of all, great to be here. I think this is the one big difference between pandemic and post-pandemic. You can see everybody, some faces you may not recognize from pandemic days to now, so great to be here, first of all. I think the question you're asking is obviously very valid. There are two aspects to this. One is from a bank's perspective, and second is from a consumer perspective. From a bank perspective, during the pandemic, we actually saw two different phenomena. One on the banking and wealth side, and other on the lending business, which is the cards, lending, auto loans, mortgages and all. On the banking side, actually we saw a phenomenon where the deposit saving rates went up significantly. And the rates went up, and that normally happens whenever there's an uncertainty. People tend to save more. So you would have seen deposits swell up across banking sector, and the central bank data validates that. Our own bank data validates that. The markets surprisingly remained fine during this period. So the investment business also actually withstood that pandemic period, and people were able to transact. Every bank was able to get back on its feet working remotely. So people could still transact and deal with the relationship managers. So that side of banking business actually did better during pandemic than actually even pre-pandemic. On the other side, on the asset business side, there's been a significant downturn, primarily driven by three factors. One, obviously, most of this region is driven by expats moving into the region. When that movement slows down, obviously you have an impact on acquisition. And those acquisition went down significantly, primarily driven by lockdown, primarily driven by lesser people moving in. A second was obviously because of restructuring across multiple industries, including hospitality and other areas. There are a lot of redundancies in the system, as a result of which many people lost their jobs. So you see credit losses going up, reserves going up on that side. And the third one was being an expat market, people travel. And the travel segment came to a complete halt. So you saw your card spending went down significantly. Domestic spending did go up, but it's not a match for foreign spending. So those are the two different dimensions we saw. Significant downturn in the asset business side, a moderate benefit or an upturn on the banking business side. Post-pandemic, as we move to post-pandemic era now, I would say, we are seeing two things happening. One, on the banking side, we still continue to see deposits continue to go up. I think the sentiment, people still are trying to save. More importantly, on the investment side, with the markets tumbling, the investment business, mark-to-markets, have really brought that business down. But on the other side, the FX volatility has really helped. So the investment business has virtually got swapped by FX business, in this part of the world especially, because people do consistent FX, take positions on FX as well as transfer FX and deal with FX all the time. So that business has remained stable. On the lending side, the business has come back significantly. What has happened especially in the cards businesses, you got a lot of domestic spending during the pandemic period because people were not traveling and people obviously didn't want to go out, so the domestic spending went up. But it's not gone down after pandemic. So people have got used to now shopping on your Noons and Amazons and all, and they don't give up that piece. But in addition to that, you're seeing the travel segment coming back significantly. So card, for example, if you look at the card spending, on an overall basis, the market spending has gone up by close to 20% in this part of the world. And that's what your master visa data will tell you. Our own experience tells us our own spending has gone up by 25, 30% in that space. So we are seeing a buoyancy coming back. You see rates moving up. The expectation that rates will move up over the course of this year, at least 4 or 5 hikes. So I think over the next 1 or 2 years, most banks will see a significant uptick in the business income on the retail banking side, driven by coming back of the asset business and buoyancy in the rate movement on the deposit side that you will see. From a client perspective, again, 2 phenomena. One, obviously, every bank had embarked on a digital journey, but the client adoption was patchy. I think that has overtaken. The pandemic has helped take that adoption high to a significant level across banks. And obviously now customers, once you are into it, you want to stay there. So now the issue is about 2 things for banks to work on, and banks are working on, as to how to bring more transactional capabilities to your digital platform, and secondly, how to enhance the client experience. Because earlier, the few clients were using it, now more clients use it, so simplicity has to be there. How many clicks you need to be able to get to the end of a transaction matters. So consumers are more and more driven by client experience, because the same consumers that do banking also shop at Amazon, also shop at Noon, also take an Uber ride. So that's their benchmark. Their benchmark is not a Fab or a Citi or a HSBC or a Citi. Their benchmark is the other digital transactions that they do. So I think that's an area that we'll continue to see client behavior focused as far as that piece is concerned. Yeah. I think that's
interesting.
Yeah.
So spending is here to stay at least for some time. At least the Amazon spending, as I'm hearing.
Yeah, it's not only spending. I think it's growing. There's an Amazon RFP in the market. I guess all banks are bidding for it at this point of time. So I'm sure, yeah, everybody's keen to get there. Yeah.
Thank you, Dinesh. But there is another angle, and I'm inviting Peter into the discussion. I mean, the pandemic and this digital revolution, as they call it, has a very different dimension, and that dimension is about channels, right? So one of the most, let's say, hotly debated topic is about the channel model and the branches. And here's a question for you, right? I mean, post-pandemic, the way we are seeing, and as we look at the future, where is the customer and where is the branch in this whole ecosystem? And how do you see distribution as we move along?
Great question, Ram, on the channels, the branch, and the customer. I think the first change I noticed post-pandemic is the microphone's covered with hand sanitizer. It's absolutely liquid all over. So that's a difference. But if I think, first of all, of the distribution model, and I think about the employees. A distribution model for a large retail bank has got thousands of people. So when the pandemic came, how do you communicate clearly with those people? And how do you hear back from the people who I find are normally right because they're closest to the customer? So that was a big challenge that we faced. For example, we introduced the first week of the pandemic a podcast. I've just completed my 100th podcast, 200th video, and we send a WhatsApp message out every day to 3,000-4,000 people, what's going on. We also do something called corridor conversations online to try and find out from the teams what are the issues, what's going on, what for the people nearest the customer is happening. So that communication model has completely changed, and I think we've learned so much from that. Branches. Is the branch dead? That's what I'm normally asked. And I think definitely the branch is transforming. That's what we believe passionately. So the transactions dropped hugely. As Dinesh said, it's very different. If you look what people can do, I think of my, 8-year-old parents in England who said they'd never use a WhatsApp, they'd never use Zoom, and now they ring me every day, and they do things that people didn't think they would do. And that's the same with customer behavior with banks. So we've seen those transactions drop, but we've seen them level off. And we believe that branches are moving from transaction to conversation. That customers still want to go sometimes into a physical arena and have a face-to-face conversation. So why would you want to do a simple transaction? You wouldn't. But a conversation on an investment product, on a mortgage, you often want that. And that leads me to the customer part. And the analogy I think of is, traditionally, I think banks have thought of customers as a branch customer, a digital customer, a telephony customer. But I liken it to eating a pizza. If I go home tonight and eat a pizza, I might go to a restaurant. I might order a takeaway. I might put a pizza in the oven. Can you classify me as a restaurant person, or a takeaway person, or an oven person? I'm all of them. If I want to watch a film, I might go to the cinema. I might watch it in the TV room. I might watch it on an iPad in my bed. Am I any of those? I want all of them. And again, from a customer perspective, what we're finding more and more is customers want different transactions at different times. So the challenge, the innovation I see for customers in retail banking is, how does the customer go on the app in the morning, ring us in the afternoon, visit the branch in the evening, and everybody knows what's going on? And the customer might change what they want, the way they transact. Every day, every type of transaction. So it's fluid, and it's a hybrid customer, in a word of post-pandemic. And if we get that right, the secret is the success in that. And that's the innovation, to make sure the customer is at the center and can use the channel they want at the time they want it.
Wow. The different shades and moods of the customer.
Absolutely.
Talking about, this is an innovation summit, the Middle East Banking Innovation Summit, and I guess it would be incorrect for us not to talk about innovation as we do the strategizing for the future. And I'm back to you, Dinesh. If I was to ask you, what would be those key innovation areas that banks should be looking forward to? Particularly, now that we actually are talking about what we are seeing both in the wealth and in the retail banking segment, and we're talking about digital phenomenally, what would you actually see as the innovation areas that banks should be focusing on from where you see where we are?
Okay. I think it's more depends on what the customers are looking for. So specifically, if you look at the wealth space, I think you'll see different dimensions of innovation coming across in different areas. Within the wealth space, as a banks, we serve affluent customers, we serve high net worth customers, and we serve ultra high net worth customers. All these customers have a different demand today, and the demand continues to evolve. So if you look at affluent customers, we will see more and more of DIY, which is do-it-yourself investments. So whether you have a mobile platform or a digital platform, most of the banks have invested in that, including ours. So customers can do the transactions themselves, they can trade themselves. You will see affluent customers moving more to robo-advisory, banks pushing them as well to robo-advisory, where you want to pay lesser fee, want to invest in standard products and move ahead. Or you will see them buying standard portfolios. You will not see them getting into specialized advisory. If you look at high net worth customers, your high net worth customers will look at a combination of do-it-yourself because they understand the trading, and looking for tailored products, not standard products that the bank end up giving all the time. It's more about tailored solution linked to my risk profile. What is my risk profile, and what tailored solution you can actually provide there. And when you look at upper high net worth customers or ultra high net worth customers, I think advisory plays a biggest role there. There you're looking for exact advice as to what should I be doing, and looking at options available to you. It's no different than today as somebody, if you fall sick, what do? You can have multiple options. You can either take yourself a paracetamol, or you can go for a video consultation today, a video consultation like a robo-advisory. You can go and see a GP, which is similar to seeing your RM, or you go to a specialist if you're not getting cured. So banking is, in that sense, wealth space especially, is evolving into similar space, where you will be able to, or you would like to, and the customers would like to as well, be catered to different solutions differently. And it has an impact on bankers as well. How do we make sure that bankers are more trained to provide tailored solution, being able to understand clients' risk profile? And also, how do you surround your bankers with specialists, be it investment specialists, insurance specialists, portfolio advisory? I think that's getting more and more critical in the space. So I wouldn't call it innovation. I would say understanding customers better and bringing solutions to what meet their specific requirement. And obviously that requires you to rework your platforms, make sure you provide multiple enabling things there as well. Yeah. I hope that
Interesting. So you see specialization as a very important lever to take innovation to the customer. But and you've seen different parts of the world, customers from various parts of the world, and is there something that you would call out as something more specific to the Middle East that you see from an innovation standpoint?
I think, yes. Not so much an innovation, but in terms of the need. If you look at Middle East, it's the only region in the world where 70% of the wealth is booked outside Middle East. It's not booked in Middle East, which is reverse of any global market. So if you look at UK or US or even Asia, Singapore, 70 to 80% of the wealth is booked in Singapore and 20% will go out. In this part of the world, 70% of the wealth is booked overseas, be it London, be it Switzerland, be it Singapore, partly driven by the nature of the market with a significant expat population, partially driven by the fact that historically there's not been a single real financial hub in this part of the world. So Dubai obviously is positioning itself, and they've obviously done a good job to be able to position themselves as a financial hub in this part of the world. But there's still more work to be done there. It takes a lot of time. It took Singapore 10 years to be finally reaching a level of being a financial hub for that part of the world, other than Hong Kong. And that's what I think Dubai is trying to get there. So that should hopefully bring some of the wealth back to the region, which is historically being built, has been booked overseas. So that's so any bank who can connect these booking centers to its customers to be able to provide a single client experience across multiple booking centers, that's an innovation unique to this market. That's innovation is not really required for a market like Singapore or a UK, but very much required here. So if I'm a client living in Dubai, I want to keep some investments here. I want to keep some investments in London or some investments in Singapore, but I want my relationship managers to know about all three of them. And I think, especially in our case, a bank like ours is in a unique position to provide that perspective, because we do have booking centers in Singapore and in Switzerland, in London. How do we connect them and bring that solution to clients? From my perspective, innovation that's very much relevant for this part of the world.
Thank you, Dinesh. And I guess there is another aspect about innovation that I want to go to you with, Peter. When we talk about innovation, and generally, and here we have a lot of sessions later today that talks about innovation coming from various angles, right? And talking about technology-driven innovation. We had a presentation before this talking about data and AI and so on. So I have a question for you. I mean, if you were to actually pick some innovation areas that are going to be material for the future, what would you pick? Would it be more on innovation on the product, or would it be innovation on customer service?
Yeah, thanks, Ryan. Great question. And for me, it's absolutely about moving from product to customer. So building on Dinesh's point around the advisory, customers don't want a product, but we've set ourselves up to build products. So if you think of a home buying experience, I've just bought a home, the country's encouraging more people to buy here, golden visas, great market opportunities we're seeing across the country. People don't want a mortgage, they want a home. So what's involved in getting a home? Well, selling an existing property, finding a property, furnishing the property, and then financing the property. So when banks start to think of the customer, not the product, you start to think about how can we help the customer furnish the home? How can we help the customer find the right home? And then, by the way, how do we help the customer finance the home? And I think that's a very different way of thinking, and that's a much more innovative way to think than just a pure product. But we've set ourselves up. We've got mortgage people. We think of a mortgage customer. We think of a mortgage product. I think the future is about home buying. Now, you then apply the same as Dinesh talked about to investments. Exactly the same principle. Again, how do we start to put the customer at the front and the systems, the product, the process behind, and make sure we look after the whole experience? Because as the technology takes us forward, that's what they're used to in every other industry. And that's where we've got to adapt, that's where we've got to change to put that customer above the product and move from product to customer.
customer above the product and product follows the customer. I think those are words of wisdom. Thank you again, Peter. I'm afraid, I guess we are running out of time. I've been getting some signals there. If there are any questions from the audience, probably you can take one before we close this session. Okay, yeah, there's a hand going up there.
Hello, good afternoon. Sami Danura from First Abu Dhabi Bank. Thank you for the insights. My question is to Mr. Vickery. Apparently, so many innovative ideas in the banking industry we have produced out of necessity, in reaction to the pandemic. Pardon. Would you see that banking industry would have evolved in the same way that it would have evolved today had it not been for the pandemic? And in other words, the question is, where would we be today in terms of innovation, in whether the branches would continue the way they are today, or would they be under the same way of transformation the way they are today, had it not been pushed, so to speak, in such situation of the pandemic? Thank you.
Thanks. I mean, I think it's accelerated it, in my view. I don't think it's particularly changed. But as I said, I go back to simple stories about people. I think about my parents, sat in England, who were technophobes, who couldn't do things, wouldn't do things, who, because of the pandemic, had no choice. And I think of mobile banking. The uptake in mobile banking, I think, has been transformational. And I think the pandemic's helped that. If you look at the way we put these kind of conferences on before the communication, we wouldn't have dreamt of that. If I think of a contact center, we got a 300-people contact center all working from home in a week. Now, if you'd have suggested that in a project management committee in a large-scale bank, they'd have thought you were crazy. But that happened. And so I think it's not changed what would have happened, but I think it's accelerated it. And I think it's brought great opportunity with it. And for me, as I said, it's always about those hybrid opportunities. It's not about boxing customers, employees, profit lines. It's about saying, how do people move across those, and where's the opportunity to look after a holistic customer?
Thank you. Thank you, Peter. Thank you, Dinesh. It was a wonderful discussion. I'm afraid we have to close the session. Thank you, audience, for your patience in listening to us.